Hello guys, glad to have you on board again today. As I stated earlier, I won't be there next week, taking some vacations, and obviously that's forever the worst timing. I should be really doing a better job into taking my vacations, because next week is obviously the biggest week we've had recently. Lots of giga caps will be showing up results and earnings for the first quarter of 2000. Last quarter of 2018. We'll see how it is, and it can be a really a game changer. So as we know, Apple has been showing some profit warning for those earnings, but the market has already sold off quite a lot, so we could have some technical pullbacks on this one. It's pretty damn hard to figure out. We've got Microsoft, we've got Tesla, we've got Facebook, we're going to have Amazon, we're going to have Boeing's. All those assets, you know, I've been selling earlier by anticipation. So Boeing, Amazon, Netflix, all those shits, I have them sold for now and until further notice, adding to the bearish leverage I have on the equities. So I'm clearly risk off in terms of market expositions to currently. If I get wrong-footed, I'm obviously going to take quite a loss, because the entire indices scenario, because I managed to take, I have Hang Seng right now, I've got the Nikkei added as well, so all those indices, all bearish, with a total risk of 12%. I only accept to do that because I'm reinvesting previous gains on the stock market, but I want to be a little bit more aggressive, as this one could be the most brutal bearish impulse we could have if I'm right. Obviously, if I'm wrong, I'm going to give probably 1/3 of the gains I previously made on the stock market. Doesn't mean I'm nothing close to switch negative in here, still having a lot of gains, just I want to be a little bit more aggressive and investing a little bit of those gains, because that was part of the plan. Just to sum this plan once again, my goal was to say basically and simply, no GBP USD, it was to say SPX, if we ever get down to the entry price of 2019, I'm fucking selling, eyes closed. We're there. Who the fuck is stupid enough to change his plans? I'm not. We're here, and I think we have the strongest resistance. It's basically the resistance out of 2017 that was stupidly overcome in 2018, and so basically what we're having here is clearly something a lot stronger. I mean, 2018 is really the year of what the fuck, okay? This is how I would like to call this one. It was supposed to be a range year in 2018, and it did. We ranged, we made upper shadow, lower shadow candle, but the goal was to say once we ranged, we're going to have a bearish week right after. That was the plan. So to me, 2018 is going to be a bearish range. It's going to be a bearish year. Doesn't mean it's obviously going to be crazy hell bearish, dropping 50% of valuations. But I think no matter how, no matter what, we're going to break the 2018 lows on going to 2019. Just it will be weird to do it just by February, but it's very well a possibility. We've been doing this pretty faster than expected, as I never thought we would be able to retrace up to those prices in just a month. But we've done that. I mean, basically, we've done a 3-month job in just a month. We've got lots of earnings showing up this week, and none the least. But the thing is that, what if it just disappoints because we're in a bear market? I mean, results and earnings, as long as they're better, you need to assess that. Generally, the market pays attention to earnings on a year-to-year basis, meaning we're always comparing to what we've done a year ahead. A year before. So what we're doing right here, having the Q4, okay, so what we're going to have in here is Q4 2018 actual earnings, okay, so earnings of Q4. Remember that Q4 2017 is the best ever fucking quarter we've ever had, okay, maximum profits, maximum ever. So what we're going to have in here is obviously disappointing in a year-to-year basis, but most of the assets have been anticipating this, like Apple, like Amazon, and things like that. They've been dropping valuations, not necessarily sharply, but if you have a look at this, I mean, in a monthly perspective, yes, obviously we've been anticipating that the results wasn't keep on going the same shape. We were losing momentum on a quarter-to-quarter basis, but right now we're going to have the actual numbers. Last quarter wasn't a bad result from Amazon. But this one is obviously going to be on a year-to-year basis compared to 2017, because 2017 was the historical high of profits we had on most big and giga caps. So obviously we're going to be lower than that. The question is how the fucking market will take that. Is the market going to buy under resistance with bad results? I'm not saying it's the end of the world. I'm just saying the results will be worse than they were in 2017, obviously. Or we will really be in a strong game changer if those results happen to be better than 2017. Because if they do, it means I'm obviously absolutely wrong. And the fact that the market is bearish, it would just be the greatest trap ever. I don't think it is, to be honest. I don't think it is. The reason why I'm trading this way. But I need to be honest, could be wrong as well. I think we've been overextending all those trends that we've gave strong bearish signals. The same bearish signals the bulls were basically opposing me last year. They were telling me, Phil, you're basically fucking shorting something that doesn't show any signs of weaknesses, something that's just bullish, and you should wait for a signal. And I mean, how fucking stupid is that behavior that the same guys right now are telling me, Phil, you're shorting something that rebounds pretty solid, and I mean, what the fuck? Do you even stand for what you say at some point, you fucking analysts? It's just, I'm a trader, so I accept being wrong, but at some point I'm just showing my balls out there. I'm just giving some bias and trading this. So if I'm wrong, I'm wrong. If I'm right, obviously no one's be there to thanking for it. That's always like that. I mean, when you're wrong, everybody's there to tell, oh, you were wrong. I mean, fuck it. If I'm wrong, that's it. Yes, I'm going to lose 12%. I'm going to be basically nearly resetting this year of trading because it was crazy fucking nice gains earlier this year with the yen. And it's been basically a 20% profit taken at so far, and even more than that. So if I had to take a loss, 12% on indices, probably I'll be taking an additional 5% out of stocks. So if I get stopped out in here, I mean, Tesla, no loss. At that stage, I can't take no losses in here, and I already banked in some gains. So the gains I had on Tesla may probably cover up half the losses I could take in the entire scenario. If everything goes crazy buying again and we reach to historical highs in Wall Street, which is a possibility, then obviously I'm going to take a stop loss on Netflix, Amazon, Boeing, Microsoft, Tesla, and Google. And if it happens, then Tesla is obviously a gain. Netflix will be stopped out break even. Amazon will be a loss. Boeing obviously going to be a loss as well, but probably just more like a 4 to 5% loss on top of the 12%. So it's going to be approximately a 17% loss out of a 20+% gain out of yen earlier this year. So I'm basically just going to be doing a reset, starting it all over again, like all the gains I had previously will just vanish. It's possible, to me very hardly probable, but we'll see how it is. And the fact is, I'm taking that nearly 20% risk, but oh fuck, if it triggers, I mean, if it just falls apart, if all those assets, the Boeing, for example, if for some reasons Boeing were to be sold, I mean, I'm talking about freaking heavily sold, which means we are here on a quarter basis, which means January has been hell of the best for the month. And what if we're disappointing out of Q4 2017? What if we disappoint as we're pricing in the same valuations, which means in Boeing we haven't priced anything to be bad. If anything shows up unexpected in here, it's going to be a bloodbath. Clearly it's going to be. And if Boeing shorts, it's going to short fucking hard for probably a 30 to 40% drop. And if it does that, then how fuck is going to drop the Dow Jones, for example? It's a 4%. I may have to review this just for a second. So I'm just going to do this. So Boeing waiting on Dow Jones. Yes. How damn it is today, because it's something that changes, and Boeing is fucking 10% of Dow Jones. So Boeing losing 40% is just by itself a 4% drop on the Dow Jones. So that's how it is. You do how you want, but to be honest, if it really have to happen, then God knows the fucking Dow Jones is going to take freaking drops. Alright? So be aware of that. Okay, Apple is definitely important in the Dow Jones, but if Boeing fails, oh gosh, the Dow Jones will fall like a fucking knife. Okay, you have to be aware of this. Out of the big names that's been rebouncing hard recently in January, obviously Boeing is one of them. So what's been causing the big stock indices to rebound? Mostly Boeing is counting in there. So we've got all of them who's been pricing out the risks. Okay, we're back into nearly historical highs in Boeing, so it has to be great. If it isn't, it's a bloodbath. Regarding Amazon, guess what? As well, we've got signs of slowdown. Obviously, Amazon won't be exiting this. If we're lowering valuations worldwide, why the hell would Amazon just keep its crazy valuations? I mean, to me, a standard and normal valuation for Amazon will be just back to retrace to 800. All right, and that's hell of a drop. And that would be just normal. It will be just going back to 1 year now, to 2 years, or just going back 2 years in time. Remember that. I mean, 2 years ago, it was pricing 800. Is that, have we changed that much since then? No, we just had the fucking tax plan overheating things that's been driving things to crazy valuation, building so many bubbles. I mean, if this is not a bubble, then God knows what a bubble is. I mean, this is clearly bubblish trading, and now everybody's trying to figure this out. It's just gonna fall, because that's how it happens freaking every bubble. They burst. And that's how it goes. And when they burst straight lines. So Amazon, is it going to burst? Obviously, yes. It's just a matter of time. So the question to me is, when you have that kind of structure, back then I was speculating that we will find a bubble burst. Now what we have in front of us is definitely a market bursting. And I just don't get it why the same stupid bulls who've been bullshitting all along last year are still bullshitting that we're going to have a bullish year in 2019. It would probably just do the exact opposite. Okay, most of them are saying, okay, we're probably risk on right now. The results and the earnings might not be that bad, but what the fuck? I mean, the results must not necessarily be that bad. But what do you think the stock market is pricing? Do you think we're pricing revenues? Do you think we're pricing profits? No, we're pricing future profit expectations, which means if we dampen those expectations, the price will have to drop, and they will drop hard. For what reason? Because we've been pricing in so much good things that won't be there. We have to get back finding ground basis for those valuations, and the last time we've been pricing correctly is pretty fucking low. I'm not saying we're necessarily going to go 300 again for Amazon, but we can definitely retrace the last support we've been building, which is a fucking 1,000. This is the last time the market were pricing. In here we didn't price anything. We've been pricing something that would never have happened. I knew that, but guess what? The guys wanted to buy. I just let them buy. You want to buy stupid things, just buy them. I'll be there to sell you when the time will come. The time came, the sales are in, and everybody think we're just going to go as usual. Does that sound kind of something you ever experienced? Does that really? Yes, it's exactly like Bitcoin back then, because I told you not to trade the SPX like you traded Bitcoin, because it's not just like that. In SPX, you've got a lot of assets. Some of them are already oversold, and they will present some buying opportunity, of course. But the big names, let's call that the top 10 or top 20 biggest market valuations, they all are fucking bubbles. Okay, we're just going to do them. Tesla, what the fuck do we pay for that? I mean, the thing doesn't even make profits. So, god damn it, how can we price that so high? So yes, even if it's not a bubble, it's something that worth shit compared to the actual valuation they have right now. Apple, bubble, bursting. Definitely a bubble. I mean, if you don't call that a bubble, God knows what the bubble is. We've got the parabolic pricing, stupid valuations, and we have the drop off. So yes, obviously in here, anything that retraced will be sold. You can be damn sure about that. Microsoft, I got fucking out. Ain't that a bubble? No, obviously some people will tell, no, it's not bubble. It's not. So you just have to tell me, guys, what the hell is a bubble if that isn't one. So Microsoft, definitely a bubble, and we probably have a lot more to drop, probably another 25% to drop before eventually finding the first interesting support areas. God knows what this is. Google, isn't that a bubble? Obviously it is a bubble as well. First valuation, 30% drop as well. Facebook, we've been dropping 46%. So guess what? It happened on Facebook. You think it's something that's not going to happen on the otherwise? It's obviously going to happen elsewhere, and Google's, Microsoft, all of them, they all have pretty much 25% to drop out of current prices. Nvidia have been playing this one, so no longer gains to make out there. Netflix, freaking rebounds. What is that? Dead cat fucking bounce. You want to sell this thing? I told you anytime a retrace 61 to 76% retracement out of a bearish impulse, you fucking sell, eyes closed, because this is the area you want to be massively selling on a bear market. So you put the damn stop loss in here, you sell right now, and you see how it goes. To me, it's going to do just fine. As for now, this one is already secured, and I'm just waiting for the earnings release to show up. I'm just waiting for the price valuation to fall, just like I think the US indices will do. Same thing goes in here. Amazon. Do you think we're going to break a single resistance on the market that is going to crash? What is that? It's another fucking bubble. Obviously it is. We've got the fucking parabolic pricing. You've got the unfolding boxes, the market the market excessive pricing. What the fuck do you think is going to happen? Everybody thinks it's going to be bought. This is purely and simply the fucking crash pattern triggering. So anytime you've got a pullback, you sell, you put a stop loss out of previous stop, just like you would buy a normal bullish trend. That's just simple as that. You've got a market that will show up strong reversal from bullish to bearish because it's been pricing stupidly bubblish. And this is what I teach you guys. Obviously I'm trading this, but I'm not the kind of guy who just open his mouth and not trading. Okay, I do trade all I'm telling about. Doesn't mean I'll be right or wrong, it's just a matter of timing. If I'm wrong in here, and if they get to my stop loss in there, you can be damn sure I'm going to be selling again, but with a different risk management. For now, I think we're just going to fail and below every resistance we've got on those assets. I clearly feel, I clearly think that next week is going to be bearish, going to break down supports, and it's going to trigger another selling pattern. For 2 to 3 weeks, we're probably going to be bearish, and guess what? It's probably going to bring Amazon back to 1,000 or eventually 1,100. But to me, that's really a minimum. Going in there for Amazon, it's a minus 30% drop out of current prices, and normally we should get there, which is 1,000, and if we go there, and that's a 43 fucking % drop. So how do you hell to think the big equities will just behave out of this? If all the major stock indices are falling because the big names are falling. So big weighting in major stock indices may just suffer huge drops. Boeing, I mean this one, god damn it. I made a video about this one, but that's the last unicorn who hasn't fallen yet. Definitely this one I think is going to. I still have doubts, to be honest. I have no certainty. I never have. But in here, everything suggests the market's just bearish. I mean, we've been exit pattern, we've been squeezing, exiting the squeeze to the downside, offering some huge pullbacks. I mean, it's just like gold on a plate. It's just come just bend and pick it up. That's the best pullback we could have. So if this market has to go down, that's the best price I would ever have expected to have. Obviously, if this market is bullish, I'm going to surrender a stop loss. That's a game I'm ready to play. But if this one falls apart, same thing goes in here. We're going to go to those price, and it's a freaking 35% drop. What I mean is that the SPX doesn't have a 30% drop bias, but more like a 20. But for what reason? Because look at the Russell. I mean, all the tiny companies have been so freaking oversold. So these ones have been rebounding, obviously. Big names have been rebounding as well, but they are all back to resistances. And I think the big names will be sold, but not necessarily I don't think the Russell will be as sold as it may be on that. So I think mid cap and some small cap may just hold on in there because they've been reversing already. It's just that reason. I mean, when we were back then trading stupid prices on the SPX, I told you guys that we had more than half of the SPX heading in bear market territory, more than 20% loss. And even at that time, we were trading fucking historical highs. Something wasn't playing accordingly. We've had huge distortions inside the indexes themselves. And now we're paying those prices. But this is why we call that phase in which the indices will play both sides. We're going to have retracement, what we just had. But anytime we retrace 61 to 76, you want to fucking sell. That's how it is. So that's why I'm selling, even though I know it's anticipated, I know it's speculative, so I do that with a risk management. If it goes wrong, you can be damn sure I'm ready, and I won't hide myself. You know how much I'm going to lose, so if it goes wrong, you know what's going to happen. Not the kind of guy who's going to hide. Obviously not. You know how much I'll make, you know how much I lose if this turns out to be right or wrong. Now I basically placed my bet. The market will make a decision. I hope it's going to be the best one, but I'm definitely having some good signs. I mean, the technicals are in my favor. The risk-reward ratios are in my favor as well, so God knows, why would I just run away from my plans? This is my plan. I've got everything I needed to activate the plan. Obviously, yes, the timing is a little bit, it's kind of a bitch right now because we've been doing this pretty solid, and that V-shaped structure can be scary, but I'm not. I'm pretty damn sure you really need to assess the fact that this could be a replicate of that. Could very well be this. But the problem is, if this is what's about to come, then no matter how, no matter what, we're just going to do something like that, which means we can try to save ourselves for a bit more. I mean, just do something like that, okay, round bottoming. But anyway, we're not going to have that afterwards. What we're going to have afterwards is this, if we're going to play that game. So either way, we're going to get back to support areas. I don't nearly think that we're going to go historical highs again, but we could. I mean, for some reasons, the market can do whatever it wants. So be ready that you must not be selling your house to pay for your short positions on the NASDAQ or on the indices, because if it goes wrong, you're just broke. Really be ready for this. If you're betting it all on just a single trade, you're never going to be a trader. That's not the mindset. The mindset is just, okay, I have strong confidence. I have what I need. Psychological pattern suggesting we have bearish market, but everybody is ignoring this, the gray rhino pattern. I've got technical patterns suggesting we've got a major top in here, but everybody think we're going to go higher. Okay, so technical, psychological patterns, strong personal convictions that we've the market isn't pricing in normal things as it should be. We're clearly not pricing this. We're over liquid, which means too much liquidity in the market, and in a bearish market the liquidity can be sold, and that's the problem, which means when we have too much liquidity, some people must, and at some point will get aggressively speculating to the downside, which is going to push prices even further to the downside. That's exactly it. We have levels of liquidity that we've never had before, so we don't know how a bear market behaves with that condition, so we're going to figure this out. And for now, everybody thinks that liquidity can only be bullish. But, I mean, when you gave money to somebody, it can just do whatever the fuck it wants. It can sell. It has the rights to. So, at some point, we've got confidence that things will be great. The stock market will be saved once again by the central bankers. But I don't nearly think that's going to happen. So we'll see what the future will give us. We're obviously going to have a couple very interesting weeks ahead of us. This week definitely is the strongest one, and you can be damn sure I'm going to be watching for this each and every day. I'll be on vacation, but that doesn't mean the market stops, and neither will I. So I'll have a look at the market. I'll do trades. I'll tell you right in Twitter if I do anything regarding the portfolio, some invalidation, partial invalidation, or validation, partial profit taking. I'll tell you about everything when I'll have the time. So obviously it's not necessarily going to be real time, but I'll do anything I can to at least make some digest throughout the social networks anytime I'll be pressing a button. All right, so trade safe for the week ahead. Be aware that this is the highest level of uncertainty we've ever had. This is the reason why we're basically trading at 50% of the global prices. We're basically halfway through the bottom and the top, and the market is hesitating. I think we have a bearish bias, reason why we should be showing up that bias into prices. If we're not, means that we're not bearish. And if we're not bearish, probably going to have some more years to trade both sides, which means sideways action could be extended throughout the next 2 years if we are not bearish in here. Reason why I think we don't have 2 years on top of us before heading into recession kind of trades. Probably to me, recession trades going to be late 2019 or 2020, and I don't think we have more time to save. So bears will probably show up in here for many reasons, psychological pattern, technical patterns. I just think that this trend line we clearly see and everybody sees, it's just going to be sold, just like that. I mean, sometimes people want to overthink things, turn them complicated. We could just mess around a bit in here for a few days. No problem with that. We can have some jitters, sideways action in here. Stop losses are in here. So obviously I let some room for the market to work this area because you can't be too aggressive in here. Those who will put a stop loss in here, it's just as stupid as it could ever be. You shouldn't put your stop losses in here. We've got earnings fucking release coming, and you know the market is going to be volatile. Some guys will be insider trading, some other guys will be aggressively anticipating some good or bad results. So yes, it's going to be a mess. Facing that mess, you don't want to be too aggressive. You really don't want to. All right, so trade safe. Have some position sizing according to the risk, which means if you can't pay for a stop loss at 2800, then definitely you shouldn't even trade that area and wait for further informations, confirmations, or better prices. But if you can't figure out a stop loss up there, there is no trading to me. Anything with a stop loss below this is just fucking gambling. All right. So get out of gambling, manage the risk, be aware that the level of risk is high, therefore your stop losses must be far as well. I want to take some risk, so you know I've been losing, I'm risking more than 15% on my overall scenario, so basically 12 on the indices and 5 additional losses, I think 5% losses additional from the stocks themselves if it all goes wrong, but you can be damn sure that they're not all going to lose, as I pick you right here into General Electrics. If for some reasons the market wants to buy himself out of that dip, you can be damn fucking sure that General Electric is going to be heavily bought. So anyway, it's not just going to be bad. You know how it is. And if the market does that, the dollar will just fall apart. And guess what? I have leverage position on the dollar. I'm buying the gold. So you know, even if I take that loss in here, it's going to be a significant loss. And probably one of the biggest mistakes I'll make in 2019. If for some reasons the market do this and reaches historical highs, it can be done for just one thing. If this happens, then dollar, you can say goodbye. The dollar would just be a falling knife. If we do that, it's not just a 7% drop that we're going to have in the dollar. All right, stock indices reaching out their historical highs, this is where the dollar is going. All right, if we do this, then the dollar is there. All right, I'm ready. I'm ready. And if it happens, you can be damn sure I'm going to take a strong stop loss out of indices, but I'm be paying and taking twice that amount just on the dollar. And I also have euro dollar, GBP dollar, dollar yen, USD CAD as well. So all those shits will bring me a lot of money. So anyway, this is how I teach you guys to trade. No certainty, risk management, and spreading that risk. I don't have all my eggs in here. I've been spreading this, so even if it goes wrong, it will be right somewhere else, and I'll take even more gains, because that's how it is. I always risk far less than what I get when it validates somewhere, and it can't just go on the opposite side. We cannot have bullish dollar, bullish assets, bullish stocks, because that's not how the pricing works. So I'll be damn right somewhere. I can be wrong somewhere as well. Obviously, if I'm right everywhere, you can be sure I'm gonna be taking L of a year and some crazy gains if it works well. I don't know. All right. So for now, the market wants to play the sideways jitters, heading and projecting itself to the week ahead because it wants good news. But we'll see if the bears are just hidden, waiting for some blood to show up.